Futures are headed down just a bit at the very beginning of futures trading right now, and bond yields are up. Well, I noted in an earlier video this weekend that one of the Fed governors gave a talk with an emphasis on being hawkish. So this might be what's already affecting the market. Now, the whole major reason why the market went up so well last week was, the Fed was being more dovish. So this hawkish thing coming out right now, quite frankly, I think it is misplaced. I think it is wrong. I'm sad that they're doing it because I think inflation is over. As you know, you'll see some more statistics on that later in this video. I'll be showing you a lot of statistics, which should make you very, very happy, make you think that we are truly in a great, the economy is going to be great, and that the markets are going to be moving up. So we'll be showing you all that here in just a minute. Of course, at the end, first we'll take you through the macro, and then we'll talk about Tesla and what its prospects are for this week. So anyway, maybe some profit taking tomorrow. We'll talk about that a little more too. All right. So if you like getting this, now this is normally my Sunday night show. I do a Sunday night show where I normally tell you about the week that's coming up. This particular week, we had a holiday on Monday, so it is a Monday night show talking about Tuesday, Wednesday, Thursday, Friday, what to expect in the coming week. If you like the fact that I do that and it's useful to you, please hit the like button, hit the subscribe button, and then notify. Again, I can't tell you, I've got a 2023 projection coming out tomorrow. I've got a 2024 projection coming out on Thursday. I've got quite a few great interviews lined up. One of them with Rene. You remember Rene, he was amazing. Well, this one is really going to blow your mind. So you got to hit notify if you want to be notified of those. And of course, all of the charts and all of the spreadsheets that I'm doing with these projections, those are all put up onto Patreon, and that would give you a good reason for wanting to go ahead and do Patreon. And by the way, there's a 7-day free trial right now, so that's cool too. All right. So reporting this week is always the lightest of the month. There are not very many reports out during this particular week each month. And almost all of the reports are about housing. So you have housing starts on Tuesday. You have existing home sales on Thursday. These aren't going to move the markets. All right. It's just not. There's just not going to be any news with regard to housing. It's not like we're seeing a dramatic increase in the number of builders that want to go out there and start building. We're not seeing existing home sales is flat because there just isn't any inventory. It doesn't matter how many people want to buy them. It doesn't even matter how many people have the money to buy them. There's no inventory, so they can't buy them. They can buy what's there, and that's all they can buy. So those are not going to move the markets. Now, on Thursday, you also have the leading indicators. That used to be a big deal. It might start to become a big deal again because now the market is shifting its attention. It wants business to be good. Before, they wanted business to be bad, so the Fed wouldn't raise rates anymore. Now they're thinking it's over, inflation is done, the Fed is done raising rates, and so now they want the business cycle to go back into overdrive so that they can make money on stocks and just in general make money. So anyway, the leading indicators comes out on Thursday, and that, if it's really bad, that could certainly be something that would cause a little bit of a shrinkage in the market price. If it's up better than expected, that could go either way. It could cause people to be worried about the Fed, but it would be more confirmation that this is a strong market. So what is going to move markets this week is there's a bunch of speeches by Fed presidents and governors. So these guys go out and they'll say things, and everybody's paying so much attention to that right now. So this hawkish statement on Saturday is probably affecting things now. We might have hawkish statements this week trying to reaffirm. I just don't know what the Fed hopes they're going to do with all this bully pulpit stuff about, that they're going to raise rates, because I don't think that it's having any effect on decision-making out there. People have already raising the rates on car loans from 5.5 to 5 3/4 is not going to destroy the car market anymore. Raising it from 1% or 2%, I think my loan on my Model Y is at 2%. Raising it from 2% to 5 or 6 or 7%, yeah, that's going to make a difference. But raising it another quarter, not going to matter. So all that said, there's a ton of money on the sidelines right now. The money is sitting in personal bank accounts, as you'll see in a minute. It is sitting in corporate cash and cash equivalents. It's sitting in investor money in the treasuries, money markets, etc. This is because right now the risk-adjusted return on bonds is higher than the S&P return. So why would you buy a risky S&P for a lower return than you can get on almost guaranteed bonds? So right now, that is what's keeping the bond interest rates so low. And that is that's the only thing holding back the S&P. Now, there's a lot of people that are just equity players. So that's, they just never buy bonds. I'm that way. I don't think I've never bought a bond. So a lot of people are just equity players. So they're going to be in the equities no matter what. But there is people that do this balancing act. And right now they are heavily in bonds. Anyway, let's go ahead. I've got to show you this Yahoo News deal. Oh, and there's no significant earnings reports this week. What I want to do now is share my screen. Okay, so let's take a look at these Yahoo graphs that were put up. Of course, they've brought them in from different places. So first of all, we're going to look here at total retail and food services. Well, you can see that total retail and food services, we had obviously a big dip in May of 20. And then it reacted right back up again. And you can see we have a continuing increase on retail and food service sales. So that's a piece of good news. I'm not going to spend a lot of time on that. It's just a piece of good news. Now let's slide down to the next one. This is charge cards spending on retail and food services. And you can see that is now dropping. Now that's really good news. Oh, you want people to spend more? No, it's really good news because people were getting way out ahead of themselves on credit card spending. They were getting in higher credit card debt. And this is showing that they're spending less on credit cards. They're realizing that they should cut back on their credit card spending. So that's a really good piece of news. Okay, let's move along here. This is U.S. gasoline demand. I don't know if this is adjusted for the seasonality, but you can see that it dipped down here in January. It's really, really low. But as the year has progressed, people are spending more and more money on gasoline. And that is, barrels per day as opposed to the dollars. So even with the price of gasoline going down, obviously that's affecting people are buying more, but it's also seasonal. That's why I don't think this is adjusted for seasonality. People do drive a lot more in May, June, July, August. Okay, so but again, good news, indicating that the market is doing well. Now this is monthly median household savings and checking balances by age. And it turns out that median deposits remain well up above pre-pandemic levels across all generations. So here's pre-pandemic out here, and then deposits. People put so much money in their checking accounts because they couldn't spend it, and they were getting all these checks. But look, they're still way, way, way above the pre-pandemic levels. Gen X is up, but you look here with the Gen Zs, they've got a lot more money in their checking accounts. So now maybe some of those folks are getting ready to pay off those student debts and they figure they better have a buffer, but wow, everybody's got plenty of money in their checking accounts. This is an index of consumer sentiment. Again, you'll see it's up and down, but look here, it's just dropping like a rock 2021, 2022, early 2023. And now look, we're starting back up again. Consumer sentiment is getting positive. University of Michigan report. Okay, now let's go on back down here to this one. This is inflation. Okay, the Fed said the other day, we don't have inflation under control. We got to keep vigilant. We've got to keep on raising those interest rates. Take a look. What is the issue here? It's headline year over year is the white line. That's the headline year over year. I mean, what are we talking about here? Core is the black line, which is the core. Oh, it's the dotted line. So core down dramatically from where it was. All right. I'm going to be I told you I was going to be visiting with Rene. I think it's not going to be till Thursday. It's going to be talking all about inflation. It's going to be talking about bonds. It is a no miss. You do not want to miss this particular video with Rene on Thursday. All right, let's go into a little detail here. His CPI inflation for May 2023, the annual rate. You can see the overall 1.5, 3-month 2.2. Everything is down. Okay, now let's go down and take a look at rents. which is the one that he says he's been mostly concerned about. Now look at this. These are real-time analysis. You've got Zillow saying it's 4.5. You've got Yardi saying that it's 2.5. You've got RealPage saying it's barely over 2. You got CoStar saying that it's 1 and maybe 1.5. You've got Apartment List saying that it's 1%. You got Redfin saying that it's dropped into the negative territory. These are all real time. You know, I like Trueflation. Trueflation is saying it's around 1%. Rents are down. When I say rents are down, rents are not increasing at over 2% at this point. It's somewhere between 0 and 2%. So, but this is 2-month-old information that the Fed is looking at. This is one of my favorite charts of all today. I think that's pretty incredible. I think that might be the last one. Let me just double check. Oh, yes. Inflation expectations. Look here. This is the inflation expectations are super down. These are 1-year expectation, super down. You know, the median 3-year ahead and the median 5-year ahead, they never went up that much. They just went up a little bit to 4%. So that's another reason why bonds have stayed so low. I think that's the last one I've got for you. Well, it's just kind of a variation of that. Expected change in prices during the next year. You can see right now it's running around 3%. Okay, so that is the kind of thing that I have been talking about all along, is that we now have all of these things that are going in the right direction, which is the inflation issue ended and started to improve starting last September. It's gotten better and better all year long, and that is when the market bottomed. The bear was in October. The bottom of the bear was in October, and the market has been going up ever since. So, you know, that's what we're looking at right now. We're in this bull run, and there's no reason, as you can see from the fundamentals, it really looks good for the future with regard to the fundamentals. Now, Cathie Wood is selling Tesla stock. And everybody says, oh, headlines, Cathie Wood is selling Tesla stock. But of course, the headlines are not going to tell you the thing that would cause you not to read the rest of the story. And maybe I don't even go and look at the stories anymore, because sometimes they fail to tell you there also. Cathie Wood has to. Her exchange-traded funds, the deal that she's made when she set up those funds was she would never hold more than 10% of any stock in any of those funds. She was up, because the stock has gone up so much, she was sitting at 15, 16% of Tesla. She has to sell off. Well, she could sell it all in one day, but that would be crazy. So she's been selling a little bit at a time, and then the stock keeps going up. Last I looked, she was at around 14%. She has to sell more. That is going to impact Tesla's stock. Generally, it impacts Tesla stock for about 4 hours, or it might impact Tesla stock for the day. But then there's enough people out there that are interested, it usually all gets bought up and the stock continues to go up. Anyway, that's one element that you do need to watch out for. There's lots of people like Cathie Wood that have these kind of decisions that they make where they need to sell, or where their technical analysis says it's time to sell, or whether they've hit a goal and they need to sell because they hit the goal. All kinds of things like that going on that have nothing to do with the fundamentals and nothing to do with the technicals, if you will. So right now, Tesla stock, fundamentally, nothing stopping it from getting to 300. Tesla stock, technically, nothing stopping it from getting to 300. At 300, there is a barrier. It's going to be hard to get over 305, somewhere around there. It's going to be really, really sticky. But once it breaks through there, there's nothing to keep it from going back to all-time highs, fundamentally or technically. So that's, that's where we sit. Will we get to 300 next week? Maybe. I'd say there's a chance. It depends on the Fed. As I mentioned, all those conversations they're going to have with the folks. And it'll be reported, of course. Every one of those will be remarked on. It always depends on whether there's any crazy news out there that we're not expecting for Tesla or for the world at large. And it, may depend on some continued good news out of Tesla, which last week, and actually for 6 weeks now, it's just like a continuing good news. All we hear is good news. One thing that maybe some people didn't think was such great news, but it really is, Elon Musk said, he's being quoted, the headlines are saying that FSD makes or breaks Tesla. Well, I don't think that's really what he was saying. What he's really saying is that FSD and robotaxi will equal, the profits from those will equal all of the rest of the Tesla divisions except for Optimus. So if FSD and robotaxis become a thing, it will double the profits of Tesla at any given moment, and maybe more than that. So that's what he's trying to say. But the headline, that's not what the headline says. The headline sounds like, oh, if FSD never happens, then why bother to invest in Tesla? Well, you bother to invest in Tesla because without FSD and without the robots, Tesla passes Apple in 2026. See my video from over the weekend on Saturday morning. Anyway, yes, I think it'll probably be an okay week. Maybe it'll be sideways because there's not a lot of things going on except for the Fed. But you know, the market right now, the pressure is under it. So it's inclined to go up. It takes something to make it go down, including profit taking and certain technical issues. Okay, so that's it. It's been great talking to you. We'll talk to you more bright and early in the morning with our morning report. I'll have my regular morning report, which should be out around 10 minutes past 7 Pacific time. You can look for that, hit notify. You need to subscribe to hit notify. And then, of course, love to have you join up with my Patreon. Okay, that's it. Great talking to you.